Hey, everybody, it's Michael Martin. Thanks for being here. Got a good question in via email from somebody and said, Mike, with the market being what it is these days, momentum has stalled. There's lots of breakouts that don't continue. They reverse back on you. I don't use, some folks call those false breakouts, but when you think about it, that doesn't make sense, right? Because if something's broken out, it's made the breakout. The fact that it's failed is a second issue, right? The breakout is the new high on the price. So if it reverses, obviously you can study Victor Sperandio's 2B reversals and how to handle those. We're actually going to be teaching a class on that live, Victor and myself, coming up. We're kind of finishing the syllabus to make sure everyone gets great value. And so the question came is like, I'm discouraged because, I've been working here trying to make it as a trader, and I hear your story, and you said that it took you 4 years. Like, holy cow, this is very discouraging for me. Can you give me a shot in the arm? So basically, you have to remember, though, when I started, the resources that are available today didn't exist back then. It was much more do it by hand. There was, literally and figuratively do it by hand. We didn't have YouTube. There wasn't any social media because the internet was really in its infancy as you would think of it today. Now you've got Web3, you've got Slack channels and Discord channels, you've got, alert services, which of course in my mind's eye, if you want to be a trader, you really have to do your own homework. You have to eat your own cooking. But that's a separate discussion. And so there wasn't a way to really connect with people. LinkedIn didn't exist. There was no Twitter. Like I said, people were using 9600 baud modems. There wasn't wireless, right? So this is really crazy. So I wouldn't look, when my father was a kid, Coca-Cola, which we call Mexicoke, right? Now, back in the day when I was a kid, Coca-Cola all had sugar. It wasn't corn syrup. And for my dad, those sodas were a nickel. Now it's $3-4 for a bottle, of Coke. So I can't go back and look at yesterday's data in context of today. It might take you more than 4 years. It really depends on how much work you're really willing to do for yourself and on yourself, because you really have to have a clear vision of what risk means to you and how do you handle risk. Because sometimes people feel like what happens is when they add risk to their portfolio, it also brings in another dirty dog in anxiety, right? I don't have that in my body. Some people do, though, and it's worth talking about because I think, they put the trade on and all of a sudden their legs going 1,000 miles an hour and they're watching things in 1 minute bars, whatever. Like, that's not going to help you steer it, right? Like when the golfer hits the tee shot and they're kind of moving their body as if they can curve the ball once it's in the air. So I think the thing is mindset. When I think back, it's probably no shock to you listening, watching these videos, listening on the podcast if you're on the audio only version of it. I just had persistence and determination, and I knew I wanted to change my situation. I knew I could work hard, and I knew from that work I could make good money. But I also knew that unless I tried to make significant change, that was as good as it was going to get. And I think I've talked about, my upbringing and the things that I did to hustle to make money. I've been working since I'm 12, haven't stopped. So, and my sister and I have very, very, strong sense of grit. We had Depression era parents. So our work ethic is never the question. But the question is, how do you obviously work hard, but also smartly? And that was what I wanted to do as I was making that transition and kind of shedding the skin of my blue collar despair and into something that was more white collar, intellectual property, higher end consulting, learning how to make money with my brain. Now, it's part of the American Constitution that working hard and doing labor has virtue to it. And I agree with that. But I also think you can work as hard with mental stuff as well as you can physically. So I don't differentiate between the two and try to create a caste system as some politicians would. It's a lot of hard work to be a trader, investor, speculator. A lot more science goes into it than people think. We're not just sitting here rolling the dice. But if you want to accelerate your growth, I would spend the majority of time working on yourself. And I know you're saying there, like, this is crazy. Why would you say that? It doesn't make any sense because I don't know how to trade. And the way I would liken it this way is until you've used all the tools, a handsaw, a hammer, a screwdriver, maybe you got behind a bunting or an old Bobcat 3-foot deck, cutting lawns, doing landscaping, until you've actually done any of it, you don't really know what really resonates with you, right? Well, how does it make you feel? If we're all pleasure seekers, what of your behavior gives you pleasure? What of your behavior do you recognize that you do day after day, week after week, almost programmatically to avoid uncomfortable situations? Because the market, as they say in some 12-step programs about drugs, alcohol, tobacco, the stock market, the futures markets, they're going to amplify your biggest character defect. Because whatever you don't want to feel, somehow in the market, I promise you, there will be a situation that will manifest that will put you in exactly in the spot that you don't want to be in. So that to me means, why don't you want to be in that situation? What is it about it? What is it about losing money? What does it say about you? You might have some stuff around your ego, right? It might not be practical. You might have entitlement issues. I don't know you, so I can't say for sure. Now, there have been moments in time where I've had stronger ego than I should have. There probably certainly after 35 years that I've had times when I felt I was entitled to stuff. Actually, that's a really bad attitude, right? So I turn myself in to say that I'm not immune from anything that you're doing. I just learned to say that didn't serve me. It wasn't my birthright to go to the marketplace after having gone to, school and done very well. It all of a sudden isn't my birthright, to make money. I had to do the same work that anyone else had to do if they wanted to have a profession in, stock market or commodity futures speculation, or even as an investor. So when you do the work on yourself, to me, you get a lot closer to understanding what types of instruments, trading tactics, holding periods, what you feel about taxation. All of that stuff plays a role in your behavior. And so to me, if you study yourself, figuring out what to do in the markets becomes a lot easier. Because to me, there's certain financial trade-offs that you need to make, and there's certain emotional trade-offs that you need to make depending on the asset class, your trading style, and your holding period. So instead of trying to do a million things of experimentation to try to figure out what the emotional feeling tone is of that particular strategy, instrument, and holding period, do the work on yourself first, because then you will reveal very, very clearly what it is that you want to do. Now, if you're thinking of making 10 to 20 times your capital in any given year, that's pretty hard to do with cash unless you get super lucky. And luck is something that you're powerless over. So you must be considering leverage in some form, whether it's implied leverage in the commodity futures world or Reg T or day trading buying power in stock trading, or yes, you can use, leverage with options and stuff. But so you would have to have an understanding of that, but both emotionally and as it would relate to your trader psychology and as well as the tactics. Those two have to be conjugated. Because typically if you take big swings, you open yourself up to bigger drawdowns. And so then, play that out in your brain. You start with 100K and you're swinging for the fences, wanted to turn it into 1 million, right? Or 10x your starting balance. What kind of drawdown are you willing to go through? Because you might find that you need 50, 60% drawdown in order to get where you want to go, right? If you're looking to hit, doubles and triples and home runs, big swings, as opposed to kind of just getting on base. And that's something that you can work out emotionally beforehand. Write it out on a piece of paper. I wouldn't use the computer. I would take out paper and pen and I would sit and write it out and say, okay, start with 100K. I draw down to 70. How do I feel about that? How am I going to alter my behavior? Am I going to trade smaller or am I going to trade bigger? I think it's been proven mathematically that if you start trading bigger when you're in protracted drawdowns, you bring yourself much closer to total ruin than if you took haircuts and started trading even smaller, right, to preserve your cash and to get back in the groove with the marketplace. But going back to the original story, there weren't the resources available today for me in order to get where I wanted to go. So it took me much longer, right? Because ultimately you had books or you had relationships with people who were in the business, whose brains you could pick. That part was harder for me because I didn't really know anybody. And the folks that I did meet casually, admittedly at that time, they were a little standoffish. Some were helpful, but most were a little standoffish because it was a closed group. It was hard to get in. And so, the old saying is, if you can't get through the front door, you jump through the bathroom window. That's kind of what I had to do. I, almost pridefully had a manila folder of rejection letters from everything from we're not hiring to you're overqualified, which I didn't understand at the time, to, you don't meet the requirements. So I never got a clear vision or reason as to why I didn't fit into that group, whether it was, a hedge fund or a prop trading firm, right? HFT didn't exist at the time. And that kind of isn't really trading as much as it is, programming. And so if I wanted to accelerate that period of time and go back with perfect information, I don't know that I could have done it better because I was always very introspective. I always looked at my behavior. I always looked at the results that I was getting from my behavior. And that was just the amount of time that it took. Now the dissemination of information, the willingness for people who are participants already in the marketplace to share their wisdom has proliferated. Some of it's good, some of it's bad. But as long as you don't care about status, which kind of relates to ego, I think you just should enjoy the process, because what you learn about yourself is going to help you in your life, right? Because again, I believe we run emotional models the same way we might run investing or trading models. And you can learn a lot about yourself because your relationship with money is probably not terribly unlike one of your better or your worst relationships, right? So if you feel violated when things go against you or life isn't fair, the market's going to smack the crap out of you. And getting bitter or angry about that is victimhood, right? So there's a lot to learn. That's why I say focus on yourself, because if you can imagine the types of situations that you can end up in the marketplace, to me, then you can better prepare emotionally. Then you could affect your behavior, right? Because it's thoughts, feelings, actions. So daydream, obviously, big, fantastical dreams about how well you want to do. But at the same time, be very, very measured with your behavior, because behavior predicts where you end up. And if you take monster risks, you're going to get smashed. You can make a lot of money for sure, but you will get a smashing. You will have a big pullback and a drawdown. Maybe it's unrealized capital gains, but those two things go hand in hand. So that's the best advice I think I have is, I don't, looking back, yes, of course, there might have been things that I could have done, but it was hard to make things efficient because, again, all you had was books or people whose brains you could pick. There was really no other data source. And I've read all the books. I read all the books. I did the work. And so then I asked questions, and then I went back and reread stuff to understand. And then I tried to take that information and make it practical. How can I actually use it? Because again, I don't get paid to know stuff, right? So you have to get into the practical. You have to get into the experiential. And the more I think you experience and the more of your feelings that you're willing to feel, that combination will probably help you accelerate your growth. As soon as you have unwillingness to try new things, you stunt your growth. Why? Well, because you're sitting on your hands and you're not participating. And if you're not participating in the market, you're not getting the emotional nor the financial feedback, which is integral to growing if you want to manage risk, which is your call. So I think that kind of explains it. It was really a function of the times. It was like, think about it. It was snail mail over digital communication. It was a whole other world back then. So, and I don't have any regrets or remorse because, look what I've done. So with anything, you have to have persistence and determination, right? You can't become discouraged, which I know is hard. There were times when I've discouraged, but I wasn't so discouraged or disgusted where I just said, screw it. I did have park bench days where, I was discouraged. I knew I wasn't in a good place emotionally, so I deliberately didn't trade because I was still learning my craft. I wasn't in a good mindset, and I'd go to Central Park and sit and meditate and think through stuff about my behavior, about my feelings, and the stuff that I was willing to do. So that helped me preserve my equity, actually, right? It was something that I knew how to do inherently because it just made sense to do, rather than trade into something or a market that wasn't efficient or wasn't amenable to my trading style, which really wasn't my trading style. It was lots of experimentation, which we're going to talk about. Anyway, folks, thanks for being here. If you like anything on the show, please like and subscribe. It helps me get really good data on what type of material or recordings you like, so I can kind of stick in that neighborhood as opposed to wandering off the farm, so to speak, and doing things that it might be more in the esoterica of trading that really don't resonate with you. So thanks for being here, and I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.